Hello friends, hi, hope you all are doing good. There is a recent update in the context of the personal income tax which is applicable in Oman. On 30th of June 2025, Oman government promulgated the royal decree law by virtue of which the income tax is applicable on individuals' personal income. Accordingly, the from 2028 year onwards, the individual's income exceeding Omani Riyal 42,000, which is around USD 100,000, there will be a tax of 5%. The first question that arises is, what is the scope of this taxation? The scope of taxation is income of resident of Oman or income earned from outside of the Oman will be taxable. For income of a non-resident that arises from Oman will be taxable. The second question which my friends ask me is, what is the tax residency criteria? An individual will be considered as a tax resident if he stays in Oman for 183 days or more. Tax year. More than 183 days during the tax year. Now, what is tax year? Tax year will be the period that runs from 1st January to 31st December. While the tax will be calculated at the rate of 5% of your net taxable income, it is necessary to know what will be considered as taxable income for such persons. So the component of your gross taxable income will include your salary and wages, income from self-business activity or from self-employment, your rent as well as your lease income, the royalties, interest, dividend, capital gains on disposal of shares, securities, sukuk, capital gains on real estate, disposal, retirement, end of service benefits, any prize awards, any grants, donations, or any other amount or bonus linked to any council membership. This will be considered as your gross taxable income. And for each category, you will have to calculate your taxable income. There are certain provisions, or let's say if you are in self-employment, or if there is any rental or leasing of any properties, against such income, you will be allowed a standard deduction of 15%, or actual expense is also permitted. If you have incurred losses on certain category of expense, let's say on sale of immovable property or for sale of assets, or from rental of your immovable property, or from your self-employment, then such losses will be allowed to be offset against the future profits. The amount of loss will be allowed to be carried forward for 5 years. And if an individual earns income from an overseas jurisdiction and has paid some taxes in another overseas jurisdiction, he will be allowed to claim foreign tax credit of the tax that he has paid in the overseas jurisdiction to the extent he is subject to tax in Oman on that same income, on that doubly taxed income. It's similar to the another concept that we have, that if you have an income which is taxed in another jurisdiction, you can claim foreign tax credit. Again, there is interesting observation on what will be the tax return filing process. So the tax return is required to be filed within 6 months from the end of the tax year. If an individual is only having income from one salary sources, salary and wages from one employer, then that employer is required to file the return and not the employee. The tax return is required to be filed or submitted online. The again cream area which arises in this thing is when employer-employee relationship exists, there will be a withholding tax requirement which the employer has to deduct on the amount of salary or wages which he is paying to the employees. and on that, when withholding, how you have to deduct, how much you have to deduct, what are the ways and manners in which you have to deposit the withholding tax is something that will be prescribed by the authorities. If the amount of tax which is deducted by virtue of withholding is less than your tax liability, you will have to pay that tax amount at the time of filing of the tax return. Assume a situation where you have not filed your tax return but you are supposed to file your tax return. The government can issue a deemed assessment, and then the tax will be payable from the date of the notification on the deemed tax amount. Having said again on withholding for employer, it is also good to know that okay, if there is any public or private institution that will be making any payment to an individual exceeding Omani Riyal 22,000, then such entity has to deduct 20% of the tax on the income. So question is, first of all, it is 20% of the tax on the income and not on the gross payment. So whether like you have to determine your income or it's only on the total amount that you have to withhold will be a question that could arise. But 20% of the tax on the income is something that will need to be withheld if the payment is done by public or a private entity. And in case if the payment is done to a non-resident, so if there is a payment that is to be done to a non-resident individual, then 100% of the tax due on that income will need to be withheld. In addition to all these things, the Royal Decree number 56 of 2025 addresses several or provides guidance on assessments, penalties, and other procedural aspects which deals with taxation of a personal income tax. Having said this, Oman is first of the countries in this region to introduce personal income tax. It will be good as well as an enriching journey to understand how another countries in the region are also levying personal income tax. Do they intend to? Do they do not intend to? And even if they intend to, whether it is in a minute form or in a substantial form, the way in which they will introduce the personal income tax is something that will be a good thing for us to learn in the region, as the region is accepting tax and really embracing the same. So this was just a short introduction of how the personal income tax is getting rolled on in Oman. Will be good to stay in touch with you and provide you updates on another things. So share, like, comment and subscribe. Thank you very much.